On March 23rd, 2020, the Federal Reserve made an announcement that would change Bitcoin forever. Within 18 months, Bitcoin went from $7,000 to $68,000. 886% gain. This wasn't luck, this wasn't just hype, this was the result of one specific policy tool called quantitative easing. And here is what nobody is talking about. Fed just announced they are ending quantitative tightening in December 2025. Means this month. This could trigger the same exact event that created the last bull run. By the end of this video, you are going to understand how exactly the quantitative easing will work and why it is the single most powerful force that affecting the Bitcoin price, and most importantly, how to recognize when it is about to happen again so you can position yourself before the market moves. I am Saleh. This is the episode 1 of our complete Fed and crypto masterclass, a 4-hour series part. I am breaking down everything that professional investors know about how the Federal Reserve policy affects cryptocurrency prices. Now, most crypto contents are focusing on the trend lines and support and resistance and patterns, etc. That stuff matters, but if you don't understand the macro, specifically how the central bank policy will work, you are trading blind. The reality is that Bitcoin doesn't move in vacuum. It moves in response to the global liquidity. And the biggest driver of the global liquidity, Federal Reserve's balance sheet and their use of quantitative easing. So here exactly what we are covering in next 22 minutes. First, I am going to explain what is quantitative easing or QE in simplest term as possible, what it is and why it was created. Second, we are going to walk through the 2021 case study step by step. I will show you the exact dates the Fed made the key announcements, how much money they printed, and how Bitcoin responded. All the charts and data you can verify by yourself. And third, we will look at what's happening right now in December 2025. The Fed just ended their balance sheet reduction, and I will explain what it means for Bitcoin in next 12 months. And finally, I will give you a practical framework for monitoring Fed policy so you anticipate that massive market moves before they happens. This is the most important crypto video you will watch this year. Let's get started. Alright, let's start with the basics. What is quantitative easing? When the Federal Reserve creates new money and uses it to buy financial assets, primarily government bonds and mortgage-backed securities. Now this is crucial. This is literally new money. Fed doesn't have the pile of money sitting in there. They just create the money electronically out of thin air. It doesn't exist before. They just add zero to a computer. I know this sounds insane. It's confusing. But it's how the modern central banks works. So why do they do this? Well, normally, the Fed lower the interest rate to simulate the growth. Lower rates makes borrowing cheaper, which encourages business to invest and consumers to spend. But what happens when interest rate is already at zero? What do you do then? That's where the quantitative easing comes in. It's a backup plan, the emergency tool, and it's unbelievably powerful. Let me walk you through the mechanics of how quantitative easing actually works. I am going to break this down to 5 simple steps. Step 1. Fed creates new digital dollars. This money is brand new. It's not taken from anywhere. It's just created. Step 2. Fed uses the newly created dollars to buy bonds from banks and other financial institutions, usually treasury bonds or mortgage-backed securities. Step 3. Banks that sold those bonds now have the cash instead of bonds sitting on their balance sheets. They have the excess reserves, money they needed to do something with. Step 4. This cash has to go to somewhere. So the banks start to lending more freely. Investors starts buying stocks, real estates, yes, cryptocurrencies as well. Everyone will be looking for returns. Step 5. Asset prices rises above the board. Stocks goes up, real estate goes up, and Bitcoin goes absolutely parabolic. Now, here is what makes quantitative easing so incredibly powerful for Bitcoin specifically. There are 4 reasons why the quantitative easing is uniquely bullish for Bitcoin more so than almost any other assets. Reason number 1, when the Fed prints trillions of dollars, money flows through the financial systems looking for returns. Bitcoin with its fixed supply 21 million become incredibly attractive. It's simple supply and demand. The more dollars chasing the same amount of Bitcoin. Reason number 2, The inflation hedge narrative. When money supply expands dramatically through QE, people will worry about the currency devaluation. Their dollars will be worth less in the future. Bitcoin with its hard cap and predictable issuance cycle become digital gold, a hedge against the monetary inflation. Reason number 3. Lower opportunity cost. QE pushes the bond yields to near to zero. When savings accounts and essential bonds pays absolutely nothing, opportunity cost of holding Bitcoin, which also pays no yield, become much more smaller. You are not giving up much by holding a volatile asset. Reason number 4. The risk-on psychology. QE creates what we call risk-on environment. When the liquidity is abundant, investors feel wealthy, confident, and willing to take the chances. They move up their risk curves, and Bitcoin sits at the very top of that curve. When all these 4 factors align, which exactly what happening during QE, you will get an explosive Bitcoin growth. And we can prove this with the real data. Let's go back to March 2020. The world is shutting down because of COVID-19. Panic is everywhere, and the financial market is absolutely collapsing. On March 12, 2020, stock market triggered a circuit breaker. The trading has to be halted because the price were falling too fast. S&P was down 10% in a single day. Bitcoin wasn't immune. It crashed from around 8k to 3,800 in 48 hours. 50% decline. People were terrified. But then on March 23, 2020, the Federal Reserve made an announcement that would change everything. And I am reading the actual statement here. The Federal Reserve is committed to using its full range of tools to support the US economy. The Fed will purchase treasury securities and agency mortgage-backed securities in the amounts as needed. That is the code for unlimited. They were saying we will print as much as be necessary. The markets heard that loud and clear, and what happened next was one of the most dramatic asset price surge in the history. Let me show you exactly what the Fed did with specific numbers and ideas. In February 2020, before the COVID hit, the Fed's balance sheet, that's the total value of assets they own, stood at about $4.2 trillion. By June 2020, just 4 months later, it had ballooned to $7.2 trillion. That's $3 trillion created in just 4 months. To put that in a perspective, that's more than they printed during the entire 2008 financial crisis, which took years. But they didn't stop there. By March 2022, balance sheets peaked $9 trillion. From $4.2 trillion to $9 trillion, that's a $4.8 trillion in new money injected in less than 2 years. Now here is what you need to understand. This wasn't just a US phenomena. The central banks around the world are doing the same thing. The European Central Bank, the Bank of Japan, the Bank of England, everyone was printing. Global M2 money supply, that's a measure of total money in the system, expanded by over 20 trillion in new money, sloshing around the global financial ecosystem looking for a home. And lot of it find its way to Bitcoin. Now look at how the Bitcoin responded. I am walking through this month by month so you can see the correlation. March 2020, Bitcoin crashes to 3,800, but the Fed announces unlimited QE on March 23rd. Within days, Bitcoin starts recovering. April to May 2020, coin climbs back to 9,000. The recovery is underway. July to October 2020, coin consolidated around 10k to 12k. That is the accumulation phase. Smart money is quietly buying while retail is still scared. November 2020, Bitcoin breaks out. It crosses 15k, then 19k, breaking the previous all-time high of 2017. December 2020, Bitcoin hits 29k, tripled from the March bottom. January to April 2021, the rocket ship phase. Bitcoin surges to 64k in April. Then we got a correction over the summer, down to 29k in July. A lot of people thought that bull run is over, but September through November 2021, Bitcoin makes the final push and hits the all-time high of 69k in November. From March 2020 bottom to November 2021 peak, 3.8k to 69k. That's an 886% return in 20 months. Now some people will say that's just a correlation, not a causation. Bitcoin has gone up anyway. But look at this chart. I overlaid Fed's balance sheet expansion with Bitcoin price. Notice how they almost moved in a perfect sync. When the balance sheet is expanding rapidly, March to December 2020, Bitcoin is rising. When the balance sheet is plateau, the summer 2021, Bitcoin corrects. When it starts expanding again slightly, the fall 2021, Bitcoin makes its final push. And this isn't just my opinion. Multiple academic studies analyze this. Research published in 2021 and 2022 found statistically significant positive relationship between QE announcement and Bitcoin returns. The mechanism is clear. More money in the system, more money is chasing the assets, Bitcoin goes up. But here, where it gets really interesting for us in December 2025. So we just saw what will happen when Fed turns on the money printer. But what happens when it turned off? Well, we got a brutal situation in 2021. Inflation was surging. The Fed had no choice. They had to tighten the monetary policy. In March 2022, they did three things. One, they started increasing interest rates aggressively from 0.25% to all the way to 5.25% over the next 18 months. Two, they ended QE, stopped buying bonds. Three, they started QT, the quantitative tightening. They began reducing their balance sheet, essentially destroying money. Bitcoin's response at that time, it crashed from 69k in November 2021 to 15k in November 2022, a 77% decline. The opposite of QE produced the opposite results. This proves this is not just the QE helps the Bitcoin. Absence of QE, or worse, reversal of QE through QT is devastating for Bitcoin. Okay, so that brings back to December 2025. Here is what happens recently that almost very people paying attention to. The Federal Reserve announces they will end their balance sheet reduction or QT on December 1st, 2025. That's already happened. Since 2022, they reduced their balance sheet from 9 trillion to down to about 8.7 trillion. That's 300 billion removed from the system. And now they are not even starting the QE yet. They are just stopping the QT. But historically, that's a huge inflection point. At the same time, they are cutting interest rates. They cut to 3.75 and 4% in October. They're likely to cut again, though they signaled there will be more caution because inflation is still at 3.3%. So what does this mean? It means we are in a transition phase. We are moving from a tightened environment to a neutral or potentially a easing environment. And if history is any guide, if recession fear increases, if markets become unstable, if unemployment rises, the Fed's next move will be, after ending QT, often restart QE. But it's just a gamble right now. Let me lay out three potential scenarios for 2026 based on what Fed will do. Scenario 1, the soft landing. Fed successfully bring inflation down to 2% without causing a recession. They keep the interest rates around 3 to 4%. Balance sheet stays flat, so no QE needed. In this scenario, probably Bitcoin does okay. Maybe grind higher slowly, no dramatic moves. Things like 100k or 150k range. Scenario 2, the recession or QE returns. The economy weakness, unemployment spikes, markets start crashing, the Fed panics and restart QE, maybe a 2 to 3 trillion in new money. This is the 2020 playbook. And if it happens, Bitcoin could absolutely explode. We are talking 200k, 300k or higher. This would be next bullish scenario for Bitcoin. Scenario 3, inflation resurges, the nightmare. Inflation reaccelerates, maybe due to tariffs, energy prices or supply chain issue. The Fed has to resume tightening. More rate hikes will be the potentially restart QT. This is the worst case for Bitcoin. It could see a move back down to 60k to 70k or lower, a mini bear market. Now, which scenario is most likely? I think we're somewhere between scenario 1 and scenario 2. The Fed clearly wanted a soft landing, but they're ending QT now and already cutting rates. That tells me they are worried about economic weakness. My base case is that we may see a mild economic slowdown in 2026. The Fed cut rates aggressively, and at some point, maybe Q2 or Q3 of 2026, they restart some form of QE. And when they do, we may see some patterns that already happens like in 2020. So how do you actually monitor this? How do you know when the QE is coming? I am going to give you 3 specific things to watch. Number 1, Fed's balance sheet. Go to Federal Reserve's website, federalreserve.gov. They publish a weekly balance sheet data. If you see it start expanding again, that's your signal. Number 2, FOMC meeting statements. The Fed holds 8 meetings per year. Read the statements, listen to Powell's press conferences, look for the languages like asset purchase or supporting the economy with all available tools. That's the code for potential QE. Number 3, M2 money supply. This is the total money supply in the economy. You can track it on Fed database, St. Louis Fed Economic Data website. When M2 starts growing rapidly, Bitcoin tends to follow after 6 to 10 months later. I will pull all these links in the description below. Alright, let's wrap up. Here is the key things you need to remember from this video. 1. Fed creates new money to buy bonds. This injects massive liquidity into financial system. 2. QE is uniquely bullish for the Bitcoin because of the direct liquidity injection, inflation hedge narrative, opportunity cost, and risk-on environment. 3. The 2020-2021 case study proved this. 4.8 trillion in QE coincide with Bitcoin rising 886% from 3.8k to 69k. 4. The opposite is also true. When the Fed tightened the policy in 2022, Bitcoin crashed 77%. 5. Right now, in December 2025, QT is ended in this month. While recording this video, QT is still not ended, but there is a promise QT will end in 1st December. So I am assuming the QT is ended now while I am uploading this video. If QT ended, this could be an early signal of returning to easing policy in 2026. Understanding this relationship between Fed policy and Bitcoin is absolutely critical as a crypto investor. This is what separates amateurs from the professionals. Now, this is the first part of our 4-part Fed Crypto Masterclass. In episode 2, we are diving into 5 transmission mechanisms, the specific channels through which Fed policy affects crypto prices. This gets really tactical. Episode 3 is your complete guide to reading FOMC meeting, what to look for, what languages matters, how to trade around them. And episode 4 will cover M2 money supply, the secret indicator that has an 85% correlation with Bitcoin and act as a leading indicator. If you want to make sure you don't miss these episodes, hit the subscribe button and bell icon right now. Thank you so much for watching. I will see you in episode 2 where we break down those 5 transmission mechanisms. Don't forget to like this video if you found it valuable. It really helps show this to more people who need to see it. Until next time, I am Saleh and I will see you in the next video.